Hello, my name is Zhikang Wang, and today I'm very happy to present our analysis on the equity valuation in semiconductor industry, together with my teammate Yebo, Zhai, and Yulin, Chen. And now I'll pass to Yebo for the industry analysis.
All right, thank you, Zhikang. So 2017 has been a great year for the semiconductor industry, not only because of the surging demand in some new end markets such as the IoT devices, but also because of the supply constraint which lead to strong pricing. It is expected that we are in the new expansion stage of the industry cycle in 2018, perhaps of a multi-year expansion. The big players in the industry are Intel, Nvidia, Micron. Intel Corporation design, manufacture, and sell computers, networking, data storage, and communication platform. Nvidia operates as a visual computing company. Micron Technology provides semiconductor systems. Now let's talk more about Intel. There is a newfound interest in the public sector toward big data, and more people are using smartphones, so it's a golden opportunity for Intel to be a ubiquitous part of people's life. Moreover, there are increasing requirements of fast storage and processing, which could be both a threat and opportunity for the company. Now, I will let Yulin to talk more about the financial data.
Okay, thanks, Bob. In this part, we are going to introduce our financial valuation methods and model assumption. First, we choose 4 different approaches to derive the estimated price and arrange different weights to those results based on their sensitivity to changeable rates. By comparing the current prices with estimated one, we give out our investment decision and suggestion. For valuation assumption, in dividend discount model, we choose a 3-stage model for the analysis of Nvidia and 2-stage models for Intel and Micron based on our analysis of the company. And for cash flow model, since companies in semiconductor usually have a business cycle of nearly 3 years, and especially Intel have very strong performance recent 3 years, but the trend of the growth is not sustainable under our analysis, so we choose 3 years as a stage. In sensitivity analysis, we separately analyze the sensitivity of the different valuation model to growth rate and discount rate. Apparently, we can see that the price derived from the FCFF change the most dramatically when rates change the same percent, which means that it is more likely to be influenced by rate change, thus the estimated price is less reliable. And based on the sensitivity analysis, we arrange weights to 3 results, then get the estimated weighted average price. We can see that both Intel and Micron, the current price are undervalued, while for Nvidia, it is overvalued. Then let's welcome my partner to introduce next part.
Thank you, Yulin. So based on our analysis, we think a feasible investment strategy is to long both Intel and Micron and short Nvidia. But here comes another question, that is how to arrange the proportion of our portfolio. And we find several key indicators super useful. First is beta. Beta is a measure of a stock's volatility. Since Intel has a very similar beta as a market beta, it means Intel basically has lower systematic risk. Intel also has the highest PVGO, and it pays stable dividend over the past few years. However, Intel's EPS is lower than those of Nvidia and Micron, but we think these 2 companies cannot sustain their huge growth in the last few years. So overall speaking, our suggestion is to hold larger proportion of long position in Intel than in Micron. And finally, I want to talk a little bit about the potential risk, which is super important for investors. We divided the risk into 2 parts, external and internal. For external risk, there are mainly 4 components: cyclical pattern, interest rate, tariff crisis, and emergence of new players. For internal risk, we think a major factor is a quicker end of high growth stage. And also the company should spend more money on R&D. And of course, crypto bubble burst is very important. I mean, basically, it has already bursted. Thank you for your time. This is our analysis and presentation.